frustrating at this point. I recorded a previous recording of 20 minutes and it literally cut out the audio at the 6-minute mark. So I'm going to just summarize everything I said in the previous video and then just publish this. I've been getting into the habit of doing my weekly outlooks every start of the week. This is to help me stay balanced. It's to help me take a balanced view on the market. I don't want to trade impulsively. So when I do a weekly outlook, I can hold myself accountable that I didn't follow my weekly outlook at the end of the week. So if I don't follow it or I do something contrary to what I said in the weekly outlook, I can hold myself accountable and say, like, you traded against what your plan was for the week. And it helps me keep track. It helps me, journal my trades better, journal my thoughts. And also I like to trade with a narrative. So when I start with the weekly outlook, I have a narrative for the week on how I should go about for the week. It helps me trade better. So this is my weekly outlook for the week starting 27th of July. I know I've recorded it on 29th, but the reason as to why is I've been a bit busy, but then also 29th today is FOMC meeting. We're either going to see a Federal Reserve interest hike or maybe lower or maybe staying as the same as we are at right now. But for me, my take, what I think, early prediction, I think we are going to see one of two things. Okay, I'm bullish, I'm hawkish. So we might see either interest rates going up or interest rates staying where we are. I would be caught offside if we see interest rates being lowered. So yeah. So quickly going about my weekly bias, I'm bullish dollar. I've been bullish for quite a while. Previous weeks, however, I was neutral to bearish short term and then bullish long term. The reason as to why I was that is because I wanted to see the market come into this weekly FVG and take out liquidity before moving to the upside. So when we saw the market, dilly-dallying around, not wanting to move, I was quite confused. But last week we saw bullish move, which for me was which is what I wanted to see. However, I wasn't able to capitalize on the bullish move as I've initially said in previous recordings that I don't like it when the market starts going up in one direction, like Monday, Tuesday, Wednesday, Thursday, Friday. Usually, I've with my backtesting and from my experience, I've always seen that when the market goes up Monday and Tuesday in a very one-directional move, usually you get a reversal by Wednesday, and then you see it going down on Thursday or Friday. It's not that like that's what happens all the time, 100%. Nothing is certain in trading, but like it's something that I've observed. So usually, when I'm even if I'm bullish, like I was last week, but if the market goes up Monday, Tuesday, I don't engage it as much. I don't risk, even when I get trade ideas, I don't risk as much. So yeah, coming into last week, I said I was bullish. We could go up. However, I was a bit confused because for me, the market to deliver up to this, as much as we got discount, for me I thought it wasn't enough. I expected it to come to this daily FVG. I don't know why my indicator is not showing, but let me just. So I expected the market to come to this daily FVG. I wasn't obviously sure because at the same time there's this weekly FVG. So as the market was dilly-dallying around in this FVG, I was so confused. But then one thing I wanted to see for sure was this liquidity being taken before we see a move to the upside. So the reason why, actually I had a euro idea on the very day we took out that liquidity. Let me just point out this idea that I had on euro. I drew this on the chart, like literally on the daily, when we took out that liquidity that very day. But I didn't execute on this idea. Don't get me wrong, it's not like I caught this move. I didn't execute on this idea because I was skeptical. I was saying that what if, I'm bullish dollar, bearish euro, but if the market wants to run a bit deeper into this FVG. So I didn't execute on that, although it would have been nice if I caught that, but yeah. Anyways, so the main play has been this weekly FVG. We have been seeing the market bounce off these weekly FVGs quite nicely this year. We saw the market come. It literally, after we got this market structure shift to the upside right here, we saw the market come, bounce off this weekly FEG. We get a bullish move up. Then it came, manipulated, went below this, went to this weekly FEG, and then got this bounce. And then now we came back into this weekly FEG, and I was expecting a bounce up to liquidity, because this is the weekly level that we're trying to get. So I'm bullish long term, even short term now. So obviously now if I get, and this thing is moving quite well, I like how it's moving. It's moving quite well. So yeah, this is my weekly outlook. So last week I wasn't able to execute because Monday went up, Tuesday went up. So I was like, I don't know, I was not sure. But then I came on Wednesday and tried to get a 15-minute market structure shift to the upside of the 4-hour FEG. I'm going to show that 4-hour FEG when I go on the 4-hour chart. And I was taken out. And then literally the very next day, on that same FEG, the market went up. So I didn't catch that move. However, what happened is I positioned myself ahead of FOMC on Friday. Because the market had gone up, I waited for the market to retrace a bit, entered here on Friday, and I've been bullish. Yeah. Also, I was able to execute a trade on gold on Thursday. So, with the bullish dollar, when we got last week, this weekly candle, it closed above this level. For me, I felt that was a healthy reaction coming off the weekly FEG. Another thing to highlight, my best trade that I love is a 4-hour market structure shift coming from a weekly FEG, which happened right here. Now, the reason why I didn't take this earlier, like Tuesday, to enter this position and position myself, ideally, this is how I would have wanted it. I thought this wasn't the cleanest. Yeah, I thought this wasn't the cleanest reaction, but it worked. Usually, I like to see bigger FEGs than what we saw. I like to see, a sharp change in direction. Let me just, maybe if I can highlight it here. Usually, my market structure shifts, I like to see. So let me just. I like to see market do like so. Yeah. Something like that, where the market goes up sharply. Yeah, to take out this. And I thought this was a big range, But what we saw was the market, go up slowly. It ranged a bit around here. And then even we didn't see a very sharp, it went here, went down. And so it wasn't the cleanest. I don't even know if I would call it a market structure shift, but technically it is because we took out liquidity, major liquidity. Yeah. I think SMC traders call it change of character. I don't know. I don't trade SMC, but we took out major liquidity, and then we are seeing these FEGs being taken out, and then we took out that high with FEGs, and then we bounced off that. So for me, this was all bullish confluence. Also, I'm not too much of a trend. What are they called? Trend traders or something. Trend line. I'm not too much of a trend line person, but this is some nice formation right here. This is some nice formation. So yeah, all those are my confluences for the bullish side. Also, in the prior video, I had recorded how I want to see this FVG being taken out in New York, and we are seeing it right now being taken out. And I discussed why I'm still bullish despite the fact that we have gotten a market structure shift to the downside. We're taking out a daily high. All those were concerns for bearish. Those were bearish arguments. And also the fact that we had gone up on Monday and Tuesday, and we had gone up Monday, and then Tuesday, then we got a 4-hour FVG, 4-hour market structure shift hitting a daily level right here. This is a weekly level, not just a daily level. Hitting a weekly level for our FEG, going to the downside. In good terms, I would have, in ideal scenario, I would have been very bearish. But the daily had also just turned bullish. So it has been quite interesting, and we are coming off a weekly FEG. And I'm also expecting rate hikes. So I was leaning more towards the bullish bias. Even with all that had happened. Also, just to note, yesterday when we got the market was moving lower, I highlighted this FVG and even I put a buy stop. Okay, sell limit on euro USD. So this will be a buy limit. When the market was moving lower, what I wanted to see is I didn't want to see this market close below this FVG. So I put a buy limit in this FVG. My stop loss was around here. The real stop loss is supposed to be lower, but you know, I'm like, if the market has already taken out that FEG close below, gone up to here, it surely is going for this low. So usually I put my stop loss here at the bodies, but we are seeing a good reaction. We bounced it off it. We came today, took out yesterday's low. We are bouncing off yesterday's low. We've taken out this high. We are taking out the FEG. Those are good signs. Other things I've not highlighted. Yesterday there was a trade that someone could have caught here of SMT. DXY didn't take out these lows, but Euro did take them out with a 1 hour market structure shift, catching a 1 to 2 to these highs. It was a very good trade. I saw it, but I left it because I don't like trading intraday trades before a big news event early in the week, because usually price action can be weird. I've only been in because I entered these trades on Thursday and Friday, and I entered them on the daily. So I've not been wanting to take 1 hour trades. I've been taking only 4 hour trades and daily. And I'm already positioned enough in the market. So I decided to leave it, although it really delivered quite nicely. So yeah, I'm bullish. There's many things I've not highlighted because the previous video was a 20-minute video where I discussed everything, and I can't do it all over again. As you can see, we took out liquidity sweep. Let me put the 4 hour. We had a liquidity sweep of yesterday's low right here. And so we are getting a reaction off. So the only thing I want to see is I want to see a 4 hour close above this. For me, that will be really good. It will be really good. I want to see this 4 hour market structure shift failing. I want to see it failing. I'll be honest with you. As much as those are my ideal trades, 4 hour market structure shift, off a daily FEG, off a weekly FEG, off a weekly high, off a daily high. Those are ideal setups, but I've been pretty much bullish. And also the daily is a bigger time frame than the 4 hour. So the few concerns I have: 4 hour 4 hour market structure shift on a Tuesday, daily highs hit on a Tuesday early in the week. Those were bearish concerns because all those could be signs for bearish move to the lower side. But I did take that because I've been bullish. Dollar just formed a market structure shift. We have taken out yesterday's high. We are bouncing off the FVGs. So I'm still leaning bullish. One more thing to highlight. I'm only highlighting this because we are going to FOMC news release. Normally I wouldn't highlight this, but another thing to highlight, let me just make my screen bigger. Another thing to highlight is 2-year yield, US Treasury yield, 2-year yield bond yield, alongside the interest rates. These are very correlated moves. Usually interest rates move in tandem with the yields. And as you can see, let me just make this chart smaller so that you can see it very well. It's not scaling properly. It isn't scaling properly, but you can see how correlated these two move. They really move in tandem with each other, And the 2-year bond yield, I'm using that. You can use the 1 year, you can use the 10-year, 5-year, but for me, I found the 2-year to be the best one. It is a leading indicator for interest rates. Usually, if it's very bullish, you would see interest rates also going up shortly after. The reason as to why is that the bond yield market, or the bond market, is something that is it is a live market. It is being monitored from day to day, while the interest rates are only changed at federal meetings, FOMC meetings. So what can happen is bond yields could start rising and rising before, like 2 weeks, 3 weeks, and bond yields are rising and rising, and we have to wait literally like 14 days, 20 days for the next FOMC meeting to see a rate hike. But usually bond yields go up before rate hikes. They move in tandem. Also, they move bond yields also move in tandem with the DXY. So when you see bond yields going up, usually that means also a stronger DXY, and that's what we are seeing. We had seen a pause on rate on cutting down interest rates earlier this year. We had seen a pause and then a slight decline, but then despite seeing that, when we saw a slight decline, we are seeing yields go up. Also, this is highly affected by oil prices. We saw oil prices really tumble in the previous month, I believe. And so me, I was thinking that maybe inflation had gone down a bit because of oil prices. And maybe that's why we saw a lower CPI number. But for me, I don't think that the Federal Reserve is going to use only 1 month CPI number to lower rates. So for me, I think interest rates are going to stay either the same or they're going to be hiked. One additional source is the Citadel. So Citadel is a hedge fund in the US. It's one of the big hedge funds, and even them, they are hawkish on interest rates. And this is a conclusion of this article. You can find it on Citadel. Just Google Citadel interest FOMC prediction or something to bring it is. So I have a part of succeeding in markets is identifying potential sources of edge early and pressing the advantage as momentum builds. Hence, whilst we acknowledge that it is a close call, we now see a rate hike at the July meeting. So they anticipate a rate hike at the July meeting. For me, if interest rates are reduced, if they are taken lower today, it will have caught me offside. It will have caught me offside. I'll just take my losses and accept. But for me, if they stay constant or we see them going higher, it will be a win for me. It's not that I'm gambling. It's not that I'm trading right before news. This is a position I opened on Thursday and Friday because of the daily market structure shift, as I've showed. It's not that I entered this because, FOMC is coming, but I entered this because I saw a daily market structure shift. And for me, that is even stronger than a 4-hour market structure shift. We had seen a 4-hour market structure shift earlier, which is right here. Then the daily. So I'm pretty much bullish. Despite the fact that we had seen some concerns of bearishness yesterday after hitting this high, getting a 4-hour market structure shift with FVGs to the lower side. We have seen this FVG, this bullish FVG hold up. It bounced, took out yesterday's low. It's bouncing again. So as long as we close above this FVG, I'm still bullish. I want to see this formation fail. And then, yeah, that's pretty much it. Also, I was not too scared about this because another reason why I expected this market to sort of go down. When I saw us hitting this daily level without taking out Asia first, you see, earlier in the day, we didn't take out Asia in London, and then we hit this towards the end of London, and then New York started, and then we saw market lower. This principle applies to what I always use on the weekly. On the weekly, I like to see manipulation on Monday, Tuesday. Let's say if I'm bullish, I want to see bearish move maybe on Monday and Tuesday. Usually Monday is low range, then Tuesday maybe manipulates below, and then we see market structure shift either 1 hour, 4 hour, on like Tuesday evening, going to Wednesday, and then we go up. That is obviously textbook. It happens sometimes. Sometimes, like last week, for example, Monday really went up. We saw Monday going up, Tuesday going up, then Wednesday a bit, it ranged. I literally entered off this FVG, expecting that the market was going to go up. It took me out. I was very confused. Then Thursday, literally on the same FVG, went up. I didn't see this market because for me, when I took out this loss, I was like, I don't know, I'm not sure. Coming back on the markets, I could have really got this 1 hour market structure shift to the upside, but it is what it is. I didn't trade. I entered on Friday when the market was retracing lower, and so I'm bullish. Yeah, so yeah. Going to gold and silver. My gold and silver strategy is not complicated. I literally just trade 4-hour market structure shifts. That is all. I don't trade anything else. 4-hour market structure shifts. So I don't even trade below 4-hour. My trades are only happen on the 4-hour and above. So as you can see with gold, I was bearish coming off this FVG. You can check out my weekly outlook like 2 weeks back. I talked about this FVG and how I was bearish and I was thinking it's going lower. So going to the daily, I wasn't seeing much as I was seeing a range bound market. I wasn't seeing much. But the only thing I can highlight where I'm in this trade is obviously bullish dollar and 4-hour market structure shift right here, market structure shift 4-hour entered, held through even this gap. Yesterday when the market moved lower and lower, I closed half of my position here and then another half. The only reason why I'm closing half, I would have wanted to even close less than a half, but I'm trading commodities or metals on a different broker, on a different proof firm, and it's a 10k. It's a small account, so usually my entries are either 0.02 or 0.01. So if I remove like 0.01, only 0.01 is left. So I can't take partials the way I want, but yeah, I took off partials off. Yeah, I'm expecting it to go lower with bullish dollar, and it's the same thing goes for silver. 4-hour market structure shift. And then you could even see all the other trades I taken. I took a 4-hour market structure shift right here. As you can see, 4-hour market structure shift at the low. I entered. I remember this trade, I took it up to here. Even gold I was in, because it's the same trade I took on gold. Right here. Took out partials here, and then let it run. Same with silver. Entered, took out, and left. Yeah, and then it happened right here again. 4-hour market structure shift right here. I entered. Okay, this one I didn't enter it because it was towards the end of the week. It was on a Thursday. So I didn't like that it was towards the end of the week, so I left it, but it literally ran up to TP. I wasn't anticipating for the market to follow this hard, so if I had entered this, I would have probably got out here, but yeah. So someone can ask me why did I enter when it was bullish here, but as I've said, I can't be bullish dollar and bullish gold and silver, so I'd be very skeptical about those trades. So when I got this bearish, and also one thing to highlight, last week, Monday and Tuesday, you see how gold and silver were moving up, dollar was moving up, so it really confused me as well. But the moment I got this 4-hour market structure shift to the lower side, while dollar is still moving up, I literally executed right here, and I'm holding a position. I closed partials off here. Yeah, I closed partials. Because at first I was going to close partials down here, but when the market came, it gapped. And then the market was just going down on Monday and Tuesday. I closed partials. I'll close a full TP here. So that is my weekly outlook for this week.